Looking at the Markets with David Modell. Welcome to Looking at the Markets with David Modell. Today's guest is somebody I've been looking forward to speaking with for a long time. Based in Las Vegas, Nevada, Miss Carley Garner is a commodities, futures, and options broker at Carley Trading, author of Higher Probability Commodity Trading, and a highly sought-after columnist for Stocks and Commodities magazine and TheStreet.com, among others. You've seen Miss Garner on Mad Money with Jim Cramer. She's been quoted in the Wall Street Journal. You can connect with Miss Garner at CarleyGarnerTrading.com and DeCarleyTrading.com, links in the description of the video. And now she's been gracious enough to join me on Looking at the Markets. Miss Garner, thank you so much for joining me today.
No problem, David. It's a pleasure to be here.
Absolutely. So why don't we start at the beginning? How did you get started in finance and more specifically in commodities trading?
Right. Well, it's probably a relatively boring story, but here it goes. I actually started off when I first went into college. My thought was I wanted to be a physical therapist. I did a bunch of pre-med classes, did that type of thing, and then I realized I hate touching people, and that's kind of a requirement to be a physical therapist. It's just for some reason it never entered my head.
Right.
So I said, let's go a different direction, and I ended up getting a degree in accounting and finance. I started in accounting. I hated that too, and then so I decided to go and do finance, and that was for me. So I loved it. Out of college, I was originally thinking of being a stockbroker, but I did an internship, and it wasn't that exciting. It was selling mutual funds and loaded funds, for that matter. It just honestly wasn't. I didn't feel good about what I was doing. So I looked for something else. I stumbled into commodities, and here I am. I've been doing this since 2003, and I've loved every day of it. It's a lot of fun. But I take that back. I haven't loved every day. There's definitely been some bad days, but it's one of those things that every day is a little bit different. It's new and exciting, and so it's awesome.
Yeah, and I'm glad you went down that road. And you don't have to touch people, but you're touching us through your newsletter and through your websites. I see how I did that. There you go.
Awesome.
Speaking of I wanted to talk about your book, Higher Probability Commodity Trading, which is currently available on Amazon. I recommend people check that out. It's quickly becoming a classic. But my question for you is, does someone need to be an experienced commodities trader to benefit from this book?
I hope not. I wrote it in a way that traders of all experience levels should get something out of it. The first couple of chapters is really just primer, kind of like a crash course in commodities, so that anybody that is new to this type of thing hopefully will get caught up, and then we get into some more complicated topics and strategies and that sort of thing. So I hope that even a beginning trader could pick it up and read it and understand it.
Yeah, absolutely. Now, what do you look at for as far as commodities or anything else? Are you more into the fundamentals, the technicals, or are you more of a mix?
I do a little bit of everything, to be honest. I mean, if I had to kind of break it down, I would say I mostly look at charts and seasonality. And then I also look at, I don't know if you're familiar, but the Commitment of Traders report. It's a report that comes out by the CFTC, the Commodity Futures Trading Commission, puts it out every week. And it basically gives us kind of the long and short of what type of speculators. They separate them into large specs, small specs, and commercials. And we can see if each of those groups are long or short in a particular commodity, and then we can use that to maybe guess at future price changes. It doesn't always work, but what we look for is a market that's overheated. So if speculators are just piling money into one particular trade, sometimes that's a red flag for us, and we think, hey, if everybody's already long the market, it's probably going to run out of buying soon, and so we start looking for a counter trend strategy. So we do those sorts of things. I do look at fundamentals, but with commodity trading, when you're trading futures and options, everything's on leverage. So your time horizon is usually pretty short. I mean, we're only trying to speculate on what's going to happen in the next couple of weeks to couple of months. And so when you're looking at fundamentals, it's really hard to guess what's going to happen in the next few weeks with fundamentals. It's it's too slow of a game. Any fundamental data you're looking at is probably lagging 2-3 weeks, maybe a month, and even then, it takes a while for fundamentals to even really come into play.
Yeah.
So,
I want to talk about oil, if you don't mind. Right now, the last price was $45.64 a barrel. It seems to be, I wouldn't call it free fall, but it seems to be dripping down lately. What's the possible low here? What are we looking at?
Well, honestly, I think like if you take a step back and look at a chart of crude oil over the last several months, and I'm talking like from like roughly November through now, it's really in a pretty defined trading channel. The bottom of that channel is going to come in somewhere around the $43 to $44 a barrel mark, and so I think that's where we're going. Like you mentioned, we're in the mid 45 area, so we've probably, in my guess, we probably have another $1 to $3 on the downside. I mean, crude oil's messy. People always want to know exactly where to buy it. Should I buy it at 44.20? It really doesn't work that way. It's messy. There's stop orders getting hit.
Right.
People are panicking. It's emotional. So trying to pick the exact low is really tough. But if you can pick within a $2 or $3 range, you're probably going to end up doing pretty well. So I'm looking at the low 40s as potentially being a reversal area. Not only does the chart say that, but if you look at seasonal patterns, crude tends to find some sort of a bottom here in the next couple of days. A lot of times it's just temporary, but it is something that could support the market, at least in the short term.
Yeah, I've been looking at buying possibly the USO ETF rather than going the futures route. Although the problem with buying certain oil products and commodities products in general, you have to deal with the natural decay, the contango, rolling forward, selling the front month contracts and buying the forward month contracts. Is there any way around that? Any tips on how to avoid that kind of thing?
I mean, honestly, there's really not any way to completely avoid it. An ETF, like you mentioned, they're basically doing what we're doing, but they're doing it for you. So you're basically buying into a fund that takes your money and then buys futures contract or sells futures contracts, whatever the fund is doing. And so you're basically trading futures indirectly. The thing is, you're doing it inefficiently. There's good things and bad things about that. The good thing is it's not going to move nearly as fast as a futures contract will because it's not leveraged.
Right.
But the bad thing is, I've had experiences. A couple times I tried to trade the UNG, the natural gas ETF, and I was right in natural gas. Natural gas would go up 10%, but my ETF would go up like 2%. It was really frustrating. So a lot of that is, like you mentioned, the contango is part of it, and administrative costs and rebalancing costs. Because when they're trying to base an ETF on an underlying futures contract, they have to rebalance it every couple of days or so to keep it in line, and it's super inefficient. So what I recommend people, and I mean, of course, I'm a commodity broker, so you can take it for what it's worth. I'm probably a little biased. But if you truly want to speculate in the commodity, it's a lot more efficient in the futures market, and I completely understand not wanting the leverage, because leverage is scary. It could work for you or it could work against you. But you can eliminate the leverage by just funding the account properly. So for example, just hypothetically, if crude oil is trading at roughly $50 a barrel, that means one crude oil futures contract is worth $50,000. If you put $50,000 in an account and bought one contract, you eliminated all the leverage, and you have an extremely efficient way to speculate on the market. So there is, it takes a little money to do it, granted, but you can take the leverage out of it if you really want to.
Sure. I'm also looking at the precious metals, gold and silver. I've heard I've gotten to interview some of the the big names in the gold and silver markets, David Morgan, Jordan Royburn, people like that, and now you. I can be proud to add you to the list of the best among the best. But I've gotten some really interesting target prices for gold. Literally, I've heard $10,000 an ounce for gold, $100 an ounce for silver. Realistically, I mean, what can somebody who wants to buy and hold some of the physical stuff look forward to in the for the rest of 2017 at least?
Right. I'm not one of those. I'm not so-called gold bug or somebody that's going to get really excited about the upside of gold. There are times where I think gold is an excellent buy, and I think, for speculative purposes, it's worth giving it a shot. But I don't think this is one of them. I honestly think gold is probably going to creep back down into the 1220 area in the next couple of weeks, which is where we started, this rally, this most recent rally started from that general area. I just don't see anything right now that's going to push us above 1300 in any dramatic way. I mean, we may run some buy stops up there. Gold's really good at doing that, suckering, the latecomer bulls into the market and knocking out any of the weak shorts before it turns around. So that wouldn't shock me. I mean, I could easily see 1310, 1315 on something like that. But ultimately, I think this probably isn't the time to be aggressively bullish. If we get down to the 1220s, then yeah, I think it probably is.
Fair enough. Right now gold at $12.81 an ounce, silver at $17.43, rounding off there per ounce. How about silver? What's the outlook?
Obviously silver is going to move somewhat similarly with gold, although they're not. It's not a perfect correlation. But I would probably. I see pretty good support in silver somewhere between 16 and 16.30. So I'd start to get interested in the upside at those levels, but up here I have a hard time being bullish at these levels up in the 1740 area.
Not a screaming buy right now?
Not in my opinion. I could be wrong. I mean, the thing about gold and silver is they're really emotional markets, and they'll change on a dime. All it takes is one headline and something unexpected to turn it around. So I could be wrong, but chances are it's going to relax a little before any buyers come back in.
Sure. I'll tell you what, if silver hits 16, it's going to be hard for me to resist, that's for sure.
Sure. Oh yeah, I think it's attractive down there for sure.
Are you, a personal question if you don't mind, are you a stacker yourself? Do you collect the physical stuff, the coins, the bullion?
I don't. I'm not a big it's just not it's just not my thing. I have a hard time with the bullion because of the bid-ask spread. Right. I mean, I know if you're holding it for the long run and, you probably don't care, that means nothing. But for me, I look at the bid-ask spread in the futures markets a tick or two, and then you try to buy bullion and you're talking about giving up like hundreds of dollars in the spread.
Yeah.
I can't do it. But, to each their own. The thing is about with investing and trading, it's a personality thing. You just have to find what's comfortable for you. And if you're doing what's comfortable, you're going to make good decisions for you, and it'll be okay in the long run.
Makes sense to me. Wanted to talk about Carley Garner Trading.com and DeCarley, D-E, DeCarleyTrading.com. First of all, what's the difference between the two websites, and what services are currently being offered there?
Okay, so to be 100% honest, Carley Garner Trading is really just a site that we put up for search engine optimization purposes. That way, if somebody Googles Carley Garner, they get all the information right there.
Right.
We do share some archives of some of our newsletters, and we do have several educational articles on the site. But we keep up DeCarley Trading a lot more frequently. That's going to give you all the news and updates of, for example, webinars that we're doing, any articles that we've written for magazines or anything like that, educational material that's fresh and new, and videos, will all go onto DeCarleyTrading.com. DeCarley Trading obviously is our brokerage site, and CarleyGarnerTrading.com is, like I said, it's really for SEO, but it's also really just for people looking for information about me if they want to know exactly who I am and what I do.
Right, understood. And looking at the websites, I see that you offer full services for people who would like for you to, manage their money. You also assist people who want to manage their own money, as well as a newsletter with a free trial. Is that correct?
Yeah, that is correct. Just as a disclosure to make sure everyone understands, most of our clients are self-directed. We are a brokerage firm, not unlike, some of the bigger houses you hear of, with people trading. The difference between us and them is obviously we're a boutique shop, but we do offer online trading. We have 20 to 30 platforms to choose from. Most of our clients are trading online, but what we give them that other people don't is newsletters with trading recommendations, market ideas, research, guidance, and guess what? If you pick up the phone and you have a question or you have a problem, we will answer it right away, and we know exactly how to get it corrected very efficiently. We're not going to pass you around or put you on hold.
that personalized service is what so many people are
Right.
seeking, and if they
Sure.
go and visit your website, that's what they'll get for sure. Absolutely. I wanted to talk about natty gas, natural
Okay.
gas.
All right.
I don't know, what's your outlook on it right now? I don't see any pattern in it. Can you detect anything?
Natural gas has been pretty chaotic, obviously,
Yeah.
the last several months. So anybody that's married to their position is getting hammered. Those
Yeah.
that have done well, or you have to be pretty nimble. The way that I see it is, I think we're going to continue to grind a little lower. I'm looking for maybe somewhere in the 280 mark, maybe even as low as 250 before the market finds good support. If you look back at a weekly chart or a monthly chart, you'll notice 250 is kind of the area that we've held for the last year and a half or so.
Yeah.
And markets tend to like to retest those levels, and so I wouldn't be shocked to see 250. But again, kind of similar to what I just mentioned in crude, if we do see 250 in nat gas, I'd probably be super bullish at that point.
Yeah. You're kind of like me, which is you're a value. Sounds like a value type of investor. You're not the type of person to buy after the run up, which a lot of people do. And yeah.
Right.
Yeah.
Exactly.
Yeah.
I have a hard time doing that. Sometimes that works out. It does. But more often than not, you'll find that the best trades are counter trend. At least that's been my experience.
And finally, I have to ask, what's it like to meet Cramer?
You know what? He is one of the nicest people I've ever met. And he's funny, and he's probably the smartest person I've ever met. He has a photographic memory. It's really insane.
Really?
You read something, and he can, it's unbelievable. He's good at what he does, and he's, I know people give him a hard time, but the thing I can say about that is, if anybody that goes on TV for an hour a day and has to fill it with ideas and comments and recommendations is going to be wrong from time to time. So in the long run, he does really well, and he means well. His heart's in the right place. So, hopefully people will cut him some slack.
Yeah, absolutely.
He's a good guy. He does a good job.
I might have given him a hard time a few times. I don't know, but
Right.
you know what though, he does seem like a nice enough guy. So that's
Yes,
fantastic.
Hey, I'm wrong all the time, but the difference is I'm not on TV,
Right.
for the world to see. So it's
Right.
easier for us because we don't, the world's not judging our mistakes. But, it is what it is. He's really, really good at what he does.
Fantastic. All right. People need to check out, you know what, I'm going to put DeCarleyTrading.com first.
Perfect.
Awesome.
Awesome.
Yes, there you
Thank
go.
you.
That's that. Go on Amazon, check out higher probability commodity trading, both for beginners, intermediate, and advanced commodities traders or people interested in that. I know you're on Facebook. How can people find you on social media, as well as how can they contact you for more information?
Awesome. So I'm on Twitter. The handle is at Carley Garner, so that's pretty easy. It's Carley, Garner, Garner.
Got it.
If you just not Google, if you Facebook search DeCarley Trading,
Right.
we'll come up there, and we post a lot of educational material, articles, things like that on Facebook.
Yep.
So, and we're even on Instagram. If you search DeCarley Trading in Instagram, you'll find us. So we hope to see you there.
Gotcha. Well, this has been quite an education, and of course, we're not making recommendations of what to buy or what to sell. Everybody has to do their own due diligence. But at least today, I've gotten some guidelines as to maybe what numbers to look for. At least, if you're a value investor like me. So very good. Miss Carley Garner has joined me today. Thank you so much for joining me on Looking at the Markets. I really appreciate it.
You're welcome. Thank you.
Thank you for watching. Please like, comment, and subscribe. And I'll see you next time.